As the month of March comes to an end, quarter one comes to an end, we recap this past month in the day trading portfolio. So we are now looking at the TradeZilla dashboard. I essentially export my trading logs, my option trading logs from Webull, and upload them into this every day or week or whatever. This month was kind of choppy because I was in and out of a couple of different trips, and I'm finishing the month with another period of being away from the screens. But I kind of use it as, let's say, the vacation month, if you want to call it that. And then going forward, we're going to be pretty much, front and center dialed in terms of focus for the next couple of months at a minimum until maybe the summer. We'll see how that goes, but nothing planned, at least as of now. So I want to kind of recap things and talk about a couple of different things that I took away from this month. So the good news is that as I film this video, it's technically a profitable month, but there is some stuff I want to work on. And the reason why I say the good news, because if I were to go back to last month was fucked. Last month was not good at all. The first month of the year was not good. We really had a good December 2022, and then things just went to shit. And I think it has to do with a lot of different things we've kind of talked about in past videos and whatnot. But what's more important is, I think, the takeaways. So what we're going to do is compare last month to this month first, and then we'll dive into some of the deeper data, which is pretty cool, and stuff that they have on TradeZilla. And so here we go. Right now, if we look at last month, February, again, it was a shorter month, but we were fucking horrible. I mean, negative 19, almost 2,000. I mean, call it a $2,000, loss. Our win rate was 32%, terrible. And our average win loss was pretty much the same, meaning that I was risking the same that I was losing on average. Now, there's one thing to take a trade with a 2-to-1 risk reward, or a 1-to-1, or a 3-to-1, whatever, and say, I'm going to take profits at this and I'm going to take my losses here. It's another thing to actually see what your trades are yielding, and that's what this number is telling us. It's not telling us what I thought it was going to be. It's what it actually was, which is not terrible. I mean, if you look at that, that's not terrible, but you just got to win more than you lose, and I did not. And so that's why we had a pretty bad month. But do the math. If you had a 1-to-1 or a 1.0 risk-reward ratio, or average win-loss, right? Okay, and you won 55% of your trades, and you took 55 trades, you'd make a few bucks. You actually would make a few bucks. So that's the whole thing. It's not something that I'm super worried about, because this number was actually even worse, if I'm not mistaken. If I go to customize this, and I was to go back to January 1st, and if I go to January, let's see if I can go to January 31st. Yeah, here it is. Our win loss, actually, it was better. We had a 1.31 win loss. So we had pretty bad January, pretty bad Feb. But this month, not too bad. So let's go back to last month. Anything else that was important here? Win rate was 32%. Okay, fair enough. This is for March. Let's go back to February. We only had a handful of green days throughout that, which is pretty bad. Okay, let's go back now and check out this month. We're technically green. I'll call it break even. I'll call it break even. Maybe, and then technically I'll be around one more day to potentially take something if I like something. On Thursday, the 30th. I will not be on Friday. So we'll see. I could go a little greener. I could go a little redder, whatever. But our average win-loss is pretty good. It's actually at a 1.43. It's actually more than pretty good. I'm surprised that it's that high. I thought it would be maybe 1.25, something like that. It's actually better than January. What's better is the win rate's a little better. It's not perfect just yet. It's 42%. So my takeaways from this month, for those who maybe weren't aware of last or whatever, essentially what I'm doing now in this month is just trading, simply put, one system. So it brings the amount of trades down, albeit there were a couple of days, like this day where I took 7, this day where I took 6, this day where I took 7. can pretty much guarantee you that not all of those were to the system, right? We're in line with the system that I've been trading now. And so that does bleed in. However, it was probably one of the better controlled months, I would say, despite being away the first full week and then a couple of days in between. It was one of the better controlled months that I had when it comes to the impulse trade, where you're like, fuck, I got to get in something right now. I got this. This looks good. I got to go. Like, I was much better with not feeling like that. For sure. Like, far and away. A lot better on the patience side. We'll see how that goes with a full month of things. And the thing about this month was that if you look back on the charts, I'll go back to the S&P really quick. I'll go to SPY. If we look back, I'll go to like the 1 hour chart, essentially of this month. We began the month like right here, and we finished the month like right here. We had like a lot of chop. Like, we didn't have a lot of like directional movement. It wasn't like we trended up all month or down all month. Like, it was kind of choppy. Started up good, then fell off, was like, oh shit, we're going to go down. Then we're like, no, we're actually going back up. And so it didn't really do too much in terms of progress on the overall market in a direction. And that's been the story the past, 6+ kind of months. Like, it hasn't moved, to be honest, that much, right? Maybe we're kind of breaking out now. We'll see if that ends up working out. But that's kind of like the deal. So I have to say that it's not that bad. All I will note is that a lot of trades this month, they had the potential, and then they just didn't give it to me. They really just kind of like teased you, and then they were like, oh, we're going to go, and we're not. And it was like, I felt that like, all right, fuck. Like, all right, fuck. Like, it happened like every week at least a couple of times. Some weeks better or worse than others. And I'll show you some examples of that. So the system that we're trading now is a momentum-based break system, okay? So we're not dip buying. We're not randomly playing flags or trend breaks in this. It's pretty much support resistance breaks, and that's it. And so what I mean by this kind of giving me like a lot of like, almost is today's a good example. So here's today, and I'm looking back. Actually, I'll go to futures to kind of give you a better view because it fills in some of these gaps. So essentially, I'm looking at this and saying, okay, here are some key pivot points that we're getting above. I like this, right? Market's pushing. We get above, we establish this area in pre-market, okay? Pre-market highs. We get above that. I take the break, take the momentum on that, right? We get a little push, come back at my stop. We get a little push, come back at my stop. And that happens not just on the S&P. If you go over and check out, for example, like a Microsoft, you'll see that even today as well, where you'd have this push. Here's the level that I was looking at, teasing you, breaking that level, right? You respected this level for so long, right? Many 5-minute touches that line. You can even go to like the 1 hour chart and see that it was respecting that as a resistance, got above and then fell back off. And so it was kind of this game of like, so close and then no, a lot of times. And we weren't getting these clean breaks, and it's fair enough with a range-bound market, right? You're not expecting that much. And so I haven't really sized much at all into a lot of these trades. When you do see it, you can tend to size heavier. And for example, this Microsoft, of course, I missed the bigger push. We got a bigger push later on. But we're essentially looking for these breaks. And so I've got another level essentially right here. If Microsoft came back down in the coming sessions, or let's say that today didn't happen, right? And Microsoft ended up doing this, right? This would be an idea for our breakdown that we're looking for. So there's a lot more that goes into it in terms of, what the overall market's doing, what other stocks are doing. We don't want to be playing stocks that are laggers. We want to be playing the leaders up or down, right? If we have a weak stock, right? Let's say Microsoft versus Apple versus Tesla, right? Are my three like big reds, or they're the biggest laggers today, or in terms of, or weighing the market down, the biggest leaders to the downside, and Microsoft starts to push, it starts to consolidate, build a nice level of support, for example, like this key spot, and it's starting to break down. and Apple is kind of still consolidating and Tesla still consolidating, I would take Microsoft as a break, right? So you're looking to play the leader of the pack, up or down, right? Which is something that I've done and I've liked the concept of before. I just haven't been dialed in to respecting that and sticking to that the way that I've been as of late. And so a lot of things that I could have done better. And if you go back to some of this data, some of the bigger red days, or this one red day here, like I know I could have done a lot better. I didn't need to take, however many trades there were. There's a lot of little kind of shitty trades here that I probably repeated the same general pattern that I could have just given a minute or an hour to breathe. And that's something that I do a lot better job of now. So for example, even this week hasn't been great. For example, we had this Microsoft loss, and then I left and walked away after this, actually the win, and then walked away for a while. Just didn't see things setting up. And the thing with this Microsoft win, if I go into this data, it was only a 6% trade, right? So it wasn't that great. I played the break of these highs, of the highs in early trading. So if I go back, well, we got this push, but it wasn't that much, and then it came right back down. And so a lot of these trades, what ended up happening would be we'd get a nice push, I'd scale out half, or if I bought 2 contracts, I'd scale 1 out. If I bought 3, I'd scale 1 out, and then it would come back down and it would hit my entry, and I just wouldn't accept going red on a winner, and so I would stop out. And that ended up working out because this would have gone, decently red. Yeah, did it come back later on the day? Yeah, but I'm not holding this thing all the way through that type of stuff. That's not the point. We're looking to be right or wrong pretty quick on these breaks. That's the whole point. But we're using a lot of the signals and a lot of the context to the overall market to put us in the right position that has the highest probability of making that extension up or down on that momentum break, right? That's what it is. So I'm going to know if I'm right or wrong. And it also allows me to play the options a little bit better because I'm, generally speaking, not playing a dip buy. Well, if I'm buying a dip, right? Let's say I buy this dip on Microsoft, like down in here, for example. If I buy this dip, right, there's no one, I'm going against the grain. There's no way for me to know how long it may take for it to kind of build a base in reverse. It could bounce right back, or it could take an hour. And if it takes an hour, you're bleeding out, right? You have theta decay, like the contracts you're trading, they're impacted. So you got to be careful. And there's other factors at play, which is why I've had trouble with those things, because I have a good risk reward that ends up turning into a bad risk reward with that. And then at the same time, I'm noticing that the win rates are not as good on those types of trades. Why? Because you're going against the grain. Yeah, there may be a support here or this or that, right? Sure. But you're going against the grain. So I'm going to go with momentum, with the strength or the weakness, right? If I'm playing long or shorts, and that's it. So that's essentially, in a nutshell, what happened. And they give you kind of this little score, win percentage, our win rate compared to our average win loss, compared to our profit factor. That's what we got to work on. Profit factor needs some work. But that's just telling me if I got a profitable system or not for this period that I'm analyzing. But then we had days like this. For example, this 140 on this Friday was actually really nice because it was off of a really clean setup. And it was Meta. So take a look at this. I was looking at Meta, and I essentially played the break of this double top area, or actually I played the break of this early resistance. Yeah, this is what it was. Because this part right here was our spot to watch for a break. And we got up there, stayed pretty tight to that level and broke it. And then I got in essentially with, let's see, what did I do? I bought 2 contracts and I sold one pretty quick as we had a nice push. Those contracts went 25 cents very, very fast on that initial push. And then I was in, I was free. I was ready to ride this thing up, and we had a nice push. Once it started to break down, lose momentum, I took the last one off. And that was a nice, 140, this is how this system is meant to play. And obviously you're not going to get this every single day, but in doing what I've been doing, I'm keeping the losses pretty small because, again, what's the risk? If I'm buying this, all right, I'm buying this break, I'm not going to hold Meta, for example. Let's see if I can adjust this thickness. I'm not going to hold Meta on the breakdown, right? I'm not going to let Meta come back on me, let's see. Go back in here, adjust this. I'm not going to let this thing come back like this far. Like if this thing pops and then drops, underneath this right here, I'm out. This double bottom on the 5 minute, I'm out. So it's not like you can look at it saying, oh my God, you're playing a breakout, you're risky, right? I look at it saying to myself, sure, but I'm playing with what's strong. And on that given day, there was context, there was strength in the overall market, and this had a pretty strong resistance level to watch as well. And then we had a nice push. It's something that I think that is a lot easier for me to mentally wrap my head around when it comes to playing the options. So that's where I'm at. A couple other things that I wanted to mention, or let's go to some of the reports. If I go to the reports and I go into this month, when I were to go to the options section, let's take a look. So I had some of my best success or my worst with 2 day till expiration. I played a lot of those, I guess. Some like Wednesday or Thursday. So not great there. But what I like to do is as I get towards that time, I like to push it out. So if it is Thursday, I'm playing next week contracts, next Friday contracts. If it's Monday to Wednesday, I'll play this Friday's. And the general rule of thumb for me has been about $500 per trade. I will adjust that slightly. So what I mean slightly is the trade size will be roughly $600 on Thursday, Friday, because I'm buying the next Friday. So I can go a little larger because the contracts won't move as much. They'll be about $500 on Monday, Tuesday. And then on Wednesday, they'll be about $400 because I'm playing the same day or the same week expiration that's like 2 days away, just because those would move a lot more. Just to kind of manage that. So it's kind of like the way I'm going about it. And that's kind of how, it works for me. It works for me in terms of what I see and, all that stuff. If I dive deeper into this, what are my best days? Tuesdays, Thursdays, and Fridays. Wednesdays happen to be my worst days for whatever reason. It's also the most trades that have been taken at that time or during those days. In terms of time, I've actually been better in the afternoon. And I think that has to do with letting the trades or the charts set up. And then if we get a day of kind of consolidation or a level that was respected during the day that breaks up or down in the afternoon, boom. Like that's something that I've found maybe is a little bit easier for me to kind of play. Duration of trades. I think this is kind of skewed because the longer 30 minutes to 50 minutes or for really a half hour to an hour is where I'm good. And then 2 to 4. The reason why I think this is the case is because those are the ones that are just like the trenders, right? So that's where you're in it, it's working, and it just kind of goes. And so maybe you take some profit along the way, but like that last contract or two or whatever is just riding. And it's just kind of trending higher, building higher lows, going for it. And so that's why that's going to be skewed to the longer side of the trades, I think. Because you're going to have those false breakouts. A lot of that stuff will be known pretty quick, which is why I like that. So I don't really think it's too big of a deal, but you can kind of notice that the majority of these trades, are under an hour, right? There's minimal, there's 3. Over the course of this entire month, there was only 3 trades that lasted over an hour. That number, if I were to go back to last month, look at this number, right? This number was, over an hour, there was 11 plus 5, there was 16. What that equals is more time spent at the desk, more time watching, less time doing other things that are more productive, in my opinion, right? At the time. Once you're in it, it's like, okay, either it's going to go or not. Like, I want to know and get the fuck out. Like, that's it. So that's kind of the mindset that I've been having when it comes into it. So that about will wrap it up here for this video. Hopefully this was helpful in some way, shape, or form. If you got anything out of it, what I think the biggest takeaway is track your shit. Track your shit, please. I would like to hear it in the comments. Like, if you want to do this, like, track it. It's important because there's a lot of stuff that you don't realize you're doing, and you don't have to pay for this. You can just track it on an Excel spreadsheet. Like, there's a lot that you can kind of just easily track. That's what I used to be doing. That makes it so much easier on you to kind of go back and dial into exactly the spots that you need to improve and try to figure out what's going on. So as much as this is kind of a flat month, I'm pretty happy with it because I managed everything very, very well. And the win rate's inching back. We'll see if we can get over 50% for next month. A 50+% win rate with a 1.3 risk reward ratio would be pretty nice. So we'll see if we can run that. That's the plan. Thanks so much for watching. Thumbs up button, any links, resources down below, and I'll see you guys in the next one. Peace.
you.